My name is Carolyn Freund, and I'm the Dean of the School of Global Policy and Strategy, also known as GPS, at University of California, San Diego. On behalf of the school, I want to welcome everyone to the conference on digital currency in China and Asia Pacific. The timing for this conference couldn't be better. Digital currency is an important development for the global economy. Many countries around the world are either researching or experimenting with digital currencies. The big question is whether these currencies can provide safer, faster, and cheaper form of payments, including across borders, or whether they'll create a new set of risks to financial stability and structure. Just last month, the Federal Reserve Board released a discussion paper that examines the pros and cons of a potential US central bank digital currency, or Cbdc. China and the Asian Pacific countries are an especially vital source of innovation in digital currency technology and policy experimentation. So I really want to congratulate Professor Victor Shi from our School of GPS and Josh Lipsky from the Atlantic Council's Geoeconomic Center for working together to tackle the complex issues involved in Cbdc. We at GPS are uniquely positioned to convene such an international conference with the Atlantic Council. The school is well known for following the latest technological developments and studying their political, economic, and foreign policy implications. Over the decades, the school has built a strong reputation in the study of the Asia Pacific region, especially China. We have one of the largest concentrations of China expertise in the country, and the 21st Century China Center is especially active in the policy space. This conference exemplifies the center's convening authority in a policy area important to China, US, and the rest of the world. And for any students out there online, I welcome you to inquire about our multiple graduate degree programs, including our one-of-a-kind master's program in Chinese economic and political affairs. You'll find GPS to be a great place to study the domestic politics and economy and international relations of the Asia Pacific countries. Today's public event is only the beginning of a two-day conference on digital currency in China and the Asia Pacific. I wish the conference a great success, and I look forward to seeing more public discussion and policy study emerging from our collective endeavor today. I'll now turn to Josh Lipsky from the Atlantic Council for his opening remarks. Thank you.
Well, thank you, Dean Freund, and it is such a pleasure to collaborate with UCSD's 21st Century China Center on this conference, which we aim to make an annual event. Between UCSD and the Atlantic Council, this is truly an Atlantic-Pacific partnership, and that is appropriate. The innovations that are emanating from Asia, in both the public and private sectors, are influencing the entire world. According to the Geoeconomic Center's digital currency tracker, the region has developed more than half of the world's central bank currency pilot projects. And in fact, 90 countries, representing over 90% of global GDP, are now experimenting and exploring pursuing a central bank digital currency. We know that 2022 is the year where decisions will be made that alter the financial landscape for the entire decade. From the use of blockchain, to financial inclusion, to the way central banks transmit monetary and fiscal policy to the citizens they serve. Over the next 2 days, we will explore these topics in depth. We'll welcome speakers from the Federal Reserve, European Central Bank, Bank of Thailand, the IMF, the BIS, Peking University, Georgetown, Stanford, Circle, PayPal, and leading researchers and private sector voices from across 7 time zones. Our sessions will take on entrepreneurship, regulation, the rise of central bank digital currencies, and what the future may hold for cross-border cooperation in the years ahead. But tonight, on Valentine's Day, we start with innovation, because that is the core of what is driving digital currency transformation. Both technology and policy innovation have made things that were once only theoretical, both possible and tangible. Millions of people around the world now have access to faster and safer payments, and it could soon be billions. But this transformation is not without risk, and helping economies transition safely is something we are committed to at the Atlantic Council Geoeconomic Center. You can explore our entire research database on our website and through our interactive chapter now in the chat. We hope you continue to engage with us in the days and months ahead, and we are so pleased you are with us this evening. So, without further ado, to introduce our keynote speaker, it is my pleasure to welcome Susan Shirk, Chair of UCSD's 21st Century China Center. Susan, over to you.
Thanks very much, Josh, and it's a great pleasure for 21st Century China Center to collaborate with Atlantic Council on this important conference. And it's my particular honor to introduce today's keynote speaker, Mr. Mu Changchun, the Director General of the Digital Currency Institute of the People's Bank of China. Mr. Mu is a veteran of China's central bank. He joined the Pblc in 1995 and led its payment and settlement department as Deputy Director General from 2017 to 2019. He is a graduate of Renmin University and has a master's degree from Macquarie University. And I discovered in my research that he also served as senior advisor to the African Development Bank and is a specialist on international cooperation with foreign central banks and international organizations. He has led the Pblc's Digital Currency Institute since 2019. That institute was first founded in 2016, and its job is to develop the first generation prototype of the eCNY, China's digital fiat currency. And China certainly has been at the forefront of this effort, which is now expanded to many other countries. So it is my hope that through conferences like this, we're going to close the gap of knowledge, including my own knowledge, about the digital currency and the various policies regarding its adoption by countries around the world. After Mu gives his talk, my colleague Victor Shi, who is an expert on China's finance and banking, and actually about 10 years ago, the very first conference our center had when it was founded was on the internationalization of the renminbi, and Victor led that conference as well. So he will moderate a discussion with Mr. Mu following his talk. So Mr. Mu, we look forward to hearing from you about beyond payment, the role of eCNY in China's financial ecosystem.
Thank you, Professor Shirk, and thank you for everyone to have me here. Happy Valentine's Day. Today I'm going to give you a brief introduction about the recent development about our Cbdc project, which is the eCNY. Although I think I have already repeated myself in several international occasions, I hate to repeat myself, but still, I believe there are a lot of audience today actually haven't heard about the story of eCNY. So today I'm going to go through all the development of eCNY again. With the emergence of new technology that we feel obliged to start our Cbdc project. That's actually a long story back to 2014. We have, there are a lot of drivers or, motivations to start our CBDC project, but among them, there are several very important worth to mention again. Firstly, is to improve the efficiency of the central bank payment system. In recent years, I believe that a lot of central banks are working on improving their payment system by building up a faster payment system and widen the access and include more participants from different sectors. So our project actually would like to play the role to improve the efficiency of the central bank payment system. Now we can provide 724 services to the general public, which generally extend the service hours. And in addition, ECNY system realize higher efficiency with the feature of settlement upon payment. And furthermore, we strengthen our capability. And for now, we can support 10,000 TPS. And of course, we are going to improve them furthermore. And last but not least, ECNY joins hands with more participants from different sectors, especially private sectors, including not only commercial banks and foreign financial market infrastructures, but also the PSPs, fintech companies, telecom operators, and so on. With the efforts, we can manage to increase the efficiency of the central bank payment system. Secondly, to provide a backup or redundancy for the retail payment system in China. Well, as you may know, that people in China get used to going out without any physical wallets, debit cards or credit cards anymore, but just mobile phones instead. So with the, there are two giants in that retail market, Alipay and Tenpay, seem to have already become the significantly important financial infrastructure. So if anything bad happened to them, either financially or technically, which have already happened before, in a technical sense, that will bring very significant negative impact to the financial stability of China. It's the case why Alipay and Tenpay, are not allowed inside the right lands or locked area of Winter Olympics venues due to the business privilege of the Olympic sponsors this time in Beijing. In that scenario, because those two giants are prohibited from those use cases. So in that case, the ECNY can play the role of backup because ECNY have the legal tender status and is no doubt available in the Winter Olympic venues and further offer various kinds of wallets to the athletes or the audience or the volunteers to take a dip into the convenience of mobile payments in China. So it's the same cases in the other pilot cities, whilst ECNY can offer backup or in extreme scenarios like connectivity or power shortage. The reason, but not the least, to improve the financial inclusion. As you may know that several years ago, the IMF and the World Bank have published a report. In China, around 10 to 20% population, especially those in the remote areas and the poor areas, haven't been covered by the financial system, especially you don't have a traditional bank account. In addition, as the mobile payments are so prevalent in China, foreign visitors and non-residents may also have difficulties in making payments in China because most of the merchants now they don't accept cash credit cards or debit cards anymore. So what will be the obligation for the central bank to cover those long-tail users? First, as a ECNY is loosely coupled link with the bank account, traditional bank account, digital wallets could be opened without the support of traditional banking system. On one hand, the disadvantaged ones could enjoy the basic financial services. On the other hand, those short-term foreign visitors can enjoy the mobile payments services in China. Moreover, the ECNY charges no fees from authorized operators or the individual users. That will reduce the burden of the real economy and improve the business environment. So, as with those introduction, we develop our, definition or the basic ideas of the ECNY. The ECNY is the digital version of fiat currency issued by the Pblc, which is the central bank, and operated by authorized operators, which are all private sector institutions, and it is full value-based, quasi-account-based, and account-based hybrid payment instruments with legal tender status and loosely coupled account linkage and support managed anonymity. So those are the basic ideas to describe what is ECNY, our Cbdc, and it has the following characteristics. So from these slides, you can see that to ensure that the access to the central bank money is the mandate of the central bank to provide the public with direct access to the central bank money. The ECNY has a legal tender status and has direct claim. The general public will have direct claim on the central bank. That means the general public will have to have wide and steady access to the central bank money. And the ECNY system will further make financial services more accessible, providing fair currency for a large population in various scenarios, especially those remote areas and poor areas people. And secondly, from with the two-tier system, because we managed to have to adopt a two-tier system instead of a one-tier system. That means the Pblc will issue the digital currency ECNY to the second tier, those private sector institutions, including PSP, telecom operators, and commercial banks. And the commercial banks will issue and exchange the ECNY to the general public, and then processing will take the responsibility to process all the retail transactions. This mechanism is to provide a level playing field to all market participants. So they license the commercial banks and the non-bank payment institutions, which are the PSPs, that meet compliance requirements and regulatory requirements regarding risk management on a comprehensive and ongoing basis, could participate in the ECNY system under permission, recognition, and full support from the central bank. The two-tier system can fully tap authorized operators' advantage in resources, talents, and technology to build a market-driven system that promotes innovation and competition. And it also is followed the principle of same business, same risk, same regulation. So a level playing field could be provided to the payment markets, and all the market participants will be treated equally, including the incumbent traditional financial institutions. And with the support of the two-tier system, and also we positioned, or the ECNY is mainly positioned as M0. So that is to reduce the competition with bank deposit. we have made some designs to prevent people from transferring a large chunk of deposit to ECNY system. Firstly, as I mentioned, it's positioned as a M0, so it pay no interest. People will not have the incentive to transfer deposit from their commercial bank account to ECNY wallet. Secondly, ECNY have this two-tier system to keep commercial banks in the loop, and the general public access ECNY by the second-tier private sector institutions, and ECNY has tiered wallets with different caps on different categories of digital wallets. Frictions can also be set to prevent people from transferring large amounts of deposit to ECNY. Fees may be charged for large amounts of frequent transfer of deposit to ECNY to prevent crowding out of bank deposit, to prevent arbitrage, as well as a pro-cyclical effect on the stressful conditions. Last but not least, the ECNY also has a big data analysis, risk monitoring, and early warning in place to enhance the foresightness, accuracy, and effectiveness of ECNY management. Of course, we have that is a very important characteristic, which is to protect the anonymity and the privacy of the general public. And of course, we also have to strike a balance between the full anonymity, and combating criminal activities such as tax evasion, tax financing, and money laundering. And for the traditional commercial bank services, the commercial banks are required to collect and process areas of personal data on individuals during the onboarding process or before engaging any certain business transactions with them. The ECNY attains a similar function of currency to cash and be used on a managed anonymous basis. It adopts a way to strike a balance between the two, which is to keep the degree of anonymity with a managed level. So for the, this is our ECNY wallet matrix, where the wallets could be classified into different categories as different dimensions, helping with playing its roles in building our ECNY ecosystem. Firstly, the ECNY wallet adopts tiered regimens, as I said in the previous slides, based on the KYC level. In line with the principle of managed anonymity, different categories of digital wallets with different caps will be opened according to the level of KYC strength. For instance, the lowest category of the digital wallets who enjoyed anonymous wallet with balance limits of 10,000 yuan and make payments up to 2,000 yuan per transaction and 5,000 yuan per day. This anonymous wallet could be opened with only a mobile number. Users can upgrade their wallets by providing more KYC information, such as ID or bank account information, if they want to make bigger payments with large amounts payments, or keep a higher balance. For example, if anonymous wallets was upgraded to second category, the balance limit will be increased to 500,000 RMB, and the payment limit will be lifted up to 50,000 RMB per transaction and 100,000 yuan per day. Of course, everybody could ask a question that if you know the mobile number, and then that means you know the real ID of the behind this the real person. Actually, with the support of with the protection of the personal information protection law just introduced recently, the telecom operators cannot provide any ID information to the authorized operators or the central bank. So in that case, all the anonymous wallets will remain real, anonymity from the central bank and the authorized operators. And second, the second dimension is by the users of digital wallets. We can divide the wallets with, by individual wallets or corporate wallets. The individuals and the self-employed business owners could open individual wallets, and corporates can open corporate wallets. Of course, the corporate wallets also have different transaction limits or balance limits. By the carrier type, the Ecenwa digital wallets could be classified as software wallets and hardware wallets. And by management authority, the Ecenwa digital wallets could be classified as main wallets or sub wallets. Those are the 4 dimensions of the digital wallets of Ecenwa. And as you may know that the pilots have been running smoothly, and now we have our Ecenwa pilots in Shenzhen, Suzhou, Xi'an, Chengdu, Shanghai, Hainan, Changsha, Xi'an, Qingdao, Dalian, and Beijing Winter Olympics venues. Oh, sorry. This. As October 8th of 2021, 123 million individual wallets and 9.2 million corporate wallets have been opened, with transaction volume totaling 142 million and transaction value approximating RMB 56 billion. Ecenwa have been accepted by over 1.32 million merchants, covering utility, payments, catering services, transportation, shopping, and government services. People may worried about the narrow banking effects of the Cbdc may bring. So with the trials so far, I can provide you some statistics that shows that there is no negative impact to the current financial system because of the caps in place, no interest paid, and also the back-to-back purchase function we provide. People don't need to maintain high balance in their Ecenwa wallets. As of October 2021, the total balance of the wallets is only RMB 470 million, only account for, that is very small number. You see 0.0055% of the M0 and 0.0002% of the M2. Comparing with the big number of M2 and the physical bank notes in circulation, the Ecenwa balance and the increase in central bank balance sheet is very small. For the average balance, we only have RMB 3 yuan per individual wallets and RMB 31 yuan per corporate wallets. It's quite small comparing with the electronic payments. Those are the current impact of Ecenwa to the Chinese financial system. We can conclude for now that introduction of Ecenwa have a very small impact on the financial sector, and we're not expecting that Ecenwa will have a significant impact, especially not a negative impact in terms of disintermediation, but it will just play its role as well as a backup and redundancy for the retail payments and further enhance the financial inclusion. So I will show you a video clip that showing our functions of our new apps. Hopefully, running smoothly. Well, I think the video will be more tearing up the audience since it's, CBC is already boring. So I can show you next a video of our dual offline function. Oh, sorry. Okay, people may be very curious about the dual offline function, how to realize that. I can show you a video to show how it works.
We can still make ECNY transactions when both payer and receiver are offline, which we call it dual offline payment. First, we disconnect Wi-Fi on both phones and turn on the airplane mode to simulate a no network state. For the recipient phone on the left, click Tap button. There is a reminder that we are switching to offline wallet. Now click Receive button, set the receive amount. On the payer phone, press Confirm and verify the fingerprint. Then move the recipient phone closer to the payer phone. You can see we've successfully made a dual offline payment.
And this the dual offline function, we use mobile phones to achieve it. And we also can use hardware wallets to achieve the dual offline function.
These are two ECNY e-ink display card with offline function. We can check the balance in real time from the screen. The card wallet on the right supports both pay and receive functions. Set the receive amount on this recipient card. Stick the two card wallets together. You can see an offline e-payment has been made successfully.
Okay, I know I have already prolonged my presentation. I will speed up, and for, a lot of people also wondering about the cross-border use cases for ECNY. Although we focus on, because we are mainly positioned as M0, that means we will focus on the domestic retail sector of the financial, payment service market, but also with the, effort of the international community, we are also working on to explore the possibility of cross-border use of ECNY. But in that case, we know all the concerns about from all jurisdictions, such as currency substitution, weekend capital control, and privacy issues. So we introduce 3 principles to avoid any potential negative impact on the current financial system or the international monetary system. Firstly, that is the no disruption, which is similar to the rule of do no harm. Secondly, compliance. And thirdly, the interoperability. That means we'll actually avoid or mitigate all the currency substitution and any risks are involved. We can capital control or privacy issues. I'm not going to elaborate here, but if you have further questions, detailed questions, I can answer that after my presentation. And also under the guidance with of DBS Innovation Hub in Hong Kong, we also cooperate with other central banks, including the Hong Kong MA, the monetary authorities and central banks, including Hong Kong MA, Bank of Thailand, and CBUAE to work on the Cbdc bridge project, which are exploring the capabilities of DLT and studies the application of Cbdc in enhancing financial infrastructure to support multiple currency cross-border payments. So those are my today's presentation. I will stop here. Thank you very much. Back to you, Professor.
Wonderful. Thank you, Director General Mu, for joining us tonight, or morning in your case. Thank you for a very rich presentation. As always, I learned a great deal from it. So I read that eCNY adoption has reached a new milestone in recent days at the Olympics. There was more usage of eCNY in the Olympics bubble than there was usage for Visa. And I certainly look forward to using eCNY next time I'm in China. I was kind of locked out of the modern age because I didn't have a Chinese bank account and I couldn't use Alipay the last time I was in China in 2019. So I really look forward to using it. So do we have a sense of how much payment was cleared in the Olympics bubble using eCNY, and whether the users were mainly Chinese users, or did many of the foreign athletes and team members also use the eCNY?
Well, so far, because the Olympics is still ongoing, so I don't have the total numbers of that payments inside of the red line areas yet. But for a rough idea, that I have several couple of million RMB payments every day almost, but I don't have the exact number yet. I heard that because we are locked out of that area, so we don't have the exact numbers how many are domestic users or foreign users. It seems all the foreign users are using hardware wallets, and the main domestic users are actually the athletes from Chinese teams, or the coaches, and also the volunteers and working staff inside of that venue. Or the software, software wallets are mainly used by the domestic users. So far I don't have the exact numbers, but hopefully after they conclude or the ending of the Winter Olympics, I can provide you the exact numbers.
Great, yeah. I look forward to those numbers indeed. So a question that I have is that, now eCNY has over 100 million, these are active users, I presume, millions of corporate users, as you pointed out. When is eCNY trial over, right? So it seems like, you have a lot of active users already. Why is it still in trial? What markers, whether it's sort of geographical dispersion, transaction volume, like what markers are you looking for before you would declare that the trial for eCNY is over?
Well, China is a big economic, it's a big economy. So it's a very complex undertaking for us to develop such a complicated system in a very large economy. And so we will still advance the eCNY pilot, with no preset timetable for the final launch. But so we are watching the criteria like the user experience and the security or robustness of the system, and also the efficiency of the business model. Although it's already, we have a large percentage of large amount of absolute number of population to join this trial, but still, based on the percentage, is kind of small small percentage of users comparing with Alipay and Tenpay. Comparing with the traditional electronic payment instruments. Especially for the daily active users. So we'll still we'll still further test the functions such as programmability and the robustness of the dual offline functions also maybe in the future more functions we can provide. And after that, if we are confident in terms of the security, network security and the robustness of the system, and also the scalability and the capacity of this system, we could maybe in the future we can formally launch the ECNY for the whole country.
Great, and I look forward to that. So a question I have, because I study the kind of the traditional financial system in China, and as you know, China has an enormous financial system with just trillions and trillions in bonds and and also equities assets in the financial system. Are there plans to merge the kind of ECNY with the custodian systems of bonds and stocks in China?
Well, that's a very good question. Since we are many positions at zero, that means we are mimic the physical banknotes in circulation, and at the same time, the custodian of bonds and equities, all the settlement and clearing system already digitalized for so many years. And they are efficient. They are efficient enough to provide a robustness services to the capital market participants. So if we merge that system together, that means a totally waste of the social resources and the financial resources already put into that system. So and also on the other that's it's most importantly for the M0 we have 100% reserve in place to guarantee there's no devaluation or appreciation of the ECNY system. But if we introduce that with the capital market, that means there is credit provided with ECNY, and that means we have multiplier for the ECNY. We have to, we cannot decide how much it will be decided accurately to calculate how much reserve we should provide for the ECNY system. So that will create a negative impact on the financial stability. In that case, from my personal view, that is not wise to merge ECNY system with the M2 system, especially before we can figure out how much reserve we should put in place to guarantee the 100% one-to-one guarantee or one-to-one claim on the central bank. Thank you. Back to you.
Yeah, thank you for the explanation. Before we go to audience Q&A, I have just one last question, which is, what is the single biggest lesson as you try to implement ECNY in China that you can impart to other regional central banks that are trying to institute their own CBDC? What is the single biggest lesson that the Pblc has learned so far?
Well, that's a very tough question because from the trials we have learned a lot of experiences and lessons from our trials, and most was mentioning. Well, it's hard to pick, but I will give you one. Firstly, there's a misunderstanding that with the CBDC or the digital currency, people don't need to worry about the acquiring environment building up. But actually, it's not. It's not the case. We still need to collaborate with private sectors to build up the acquiring system. That means we'll provide a better user experience to the general public. Without that building up of better acquiring environments, people will, that mitigation, immigration cost for the financial users will be very high, and that will have obstacles for the, the introduction of your Cbdc system. So firstly, you need to build up the acquiring system, to have a better acquiring system for your Cbdc in place. Of course, there are other experiences, such as to manage the balance between anonymity and the money laundering activities, combating money laundering activities. So that's also a very big lessons we learned from our trials. There's a lot of more I would like to share, but still, I know there's time constraints. So back to you.
Thanks, Director General Mu. So we have a lot of questions. I'll try to filter them a little bit. So there's a good question from Melanie Chen, which is, and this also struck me. So from your presentation, it seems like the main way to detect money laundering or to prevent money laundering, besides KYC measures, is to limit the size of the transactions. But as one way of getting it, and even in the traditional banking system, as people get around this by having many more smaller denomination transactions. What are some measures to prevent this kind of using little ants to move, types of tactics to evade money laundering measures?
Well, just as the same answer to the previous question, that we learned a lot from these trials. This is a very big lesson we learned from the trials, that to prevent the potential illegal and criminal activities. As you mentioned, that Mai Banja is a very good strategy for the criminal suspects to move money around the system. But from our trials, we also learned that the caps works very efficiently to prevent people from undertaking criminal or suspicious transfers. That's a very efficient strategy. After we introduce very stringent or prudent caps or limits on the daily transactions and yearly transactions, the money laundering and suspicious activities almost gone from the ECNY system. So it's very efficient. Of course, we know that's not enough, because some suspects may have some sophisticated or complicated technology to use hundreds of even more than that, thousands of mobile phones to move money in a very small amount. So we also use some advanced technologies with the authorized operators with the private sectors, like AI algorithm and big data analysis, to help detect the suspicious transactions. And also, we have this matrix design, and if you want to move larger amounts, the high value transactions, you have to provide KYC informations. But also with the AI algorithm and big data analysis, we can figure out those suspicious transactions. So far, the system works very well in preventing money laundering and tax evasion, also other tele-fraud activities in China.
So there's a question related to the use of AI to detect money laundering. which is, how are you finding the hardware and software vendors for different parts of ECNY, including the AI algorithms that you need to deploy against money laundering? Are these sort of done in-house by the Pblc, or are they subcontracted out to Chinese companies? And then the other concern is that, as you know, mainly because of the United States, some of the Chinese tech companies are on different lists of, at least to watch or to not do business with. Is that a concern for foreign counterparties as they think about, adopting ECNY, or at least a limited circulation of ECNY outside of China? Do they, is there going to be some kind of regulatory clash between some of these software or hardware vendors in China that are helping Pblc, and also these vendors being on various entity lists in the United States?
Well, because that's a very sensitive question that we actually have, we welcome, because we have adopted this two-tier system, we welcome all the participants, all the private sector companies, including those AI companies, those hardware vendors, to provide or participate in our ecosystem. And so now we already have hundreds of vendors and software or algorithm providers in our ecosystem. For the main functions or the core functions, we develop by our own selves. We do it in-house. For example, the dual offline function, we do it mainly in-house. We, of course, during the process, we cooperate with some hardware vendors, especially those mobile phone producers. For other algorithms, for example, the AI system, AI algorithms, we also have our cooperators in the private sector. In case of those, those companies in lease, because our ECNY system is mainly focused on the domestic sector. So in the cross-border use cases, so we actually work on the guidance or the management of the international initiatives, especially for the BS and IMF or other international standard setting bodies. So we are not going to use that technology outside of China, and or any cross-border use cases will be under the management of international organizations. So I don't see any problem with that cooperations between the public sector and the private sector. I believe all the central banks from the whole world will actually promote that partnership with private sector. And we are not touching any military functions. So personally, I don't worry about that.
Right. Sorry, our audience are filled with experts, so they have some tough questions. Maybe another sort of tough question before we go to some easier questions. So one question from Luca Ricci is, you in your talk, you had mentioned that, if Alipay or Tencent Pay were to fail, then ECNY can kind of step in as a kind of a backup system. But, as you well know, the size of the transactions is massive. Is the current ECNY system robust enough? Let's say, Alipay tomorrow were to go offline because of a virus or whatever. Can ECNY step in and replace the trillions and trillions of RMB in transactions every day on Alipay?
Well, from the design, the system design, we have the capacity, we have the scalability to provide a similar capacity as Alipay or Tenpay. So from the system design, we have the confidence to provide the backup function. to the retail payment system. As you may know, we have adopted a two-tier system. It's not the central bank actually provided retail services to the general public. It's actually we have 10 authorized operators in place to provide those retail services to the general public. So you see, we have not only we have Tenpay and Alipay in place, we also have those ICBC, Pblc, and ABC, those commercial banks and telecom operators, and other PSPs in place to provide those retail payment services to the general public. So for your question, I mean, there's no doubt we have the capacity. To be the backup, and of course, we are still in a trial period, and so far for the central bank part, we can provide 10,000 TPS in place. It's only for the cross institution or inter institutions services, but we don't have already calculate all those authorized operators capabilities in. In the future, even for our central bank level, we have the capacity of 300,000 TPS capabilities in place in the future. So if in the future we formally launch the eCNY, we can provide singly by the single function of the central bank level, we can provide a similar capacity as Tenpay and Alipay.
Wonderful. Certainly the traditional big four state banks and the other banks have a great deal of payment capacity. So maybe one or two more questions if you have time. I've been authorized to have a couple more minutes of this very rich discussion, if it's okay with you. One question that a lot of people are very interested in is cross-border use of eCNY. How do you, and you had mentioned that, China is working with other regional countries to work on these bridges between CBDCs of different countries. How do you envision this to evolve, right? Do you envision this as like mainly just at the retail level, or could it involve other kinds of cross-border transactions between China and other countries in the region?
Of course, I have already mentioned in the previous answers that we are not going to merge the eCNY from a retail or domestic part with the M2 part. But for all the, retail, that means all the service or the current account transactions could be done with eCNY. And as I mentioned in the slides, that we adopted three principles: that no disruption, compliance, and interoperability. So in the cross-border experiments or the future potential cross-border use cases, we're going to adopt those principles or observe those principles. That means the eCNY supplied by the People's Bank of China should continue to support the healthy evolution of the international monetary system and should not disrupt the other central banks' currency sovereignty, autonomy, and their ability to fulfill their own mandate for monetary and financial stability. Secondly, all the cross-border use cases arrangements should comply with the regulations and laws of the jurisdictions concerned, such as capital management, foreign exchange mechanism, and also the regulatory requirements for anti-money laundering and counter-terrorist financing. And more important part is the interoperability. How to realize the interoperability without introduce any negative impact, including currency substitution or a disintermediation, that the privacy issues, that should be done with the interoperability, that which we will adopt a currency conversion on the virtual border between different wallets. In that case, there's no, all the ECNY will be converted to the local currencies to be sent to the corporates or the individual users in the foreign country. So in that case, for example, in the Hong Kong cases, if one people send a ECNY remittance to a Hong Kong individual, the Hong Kong individual will receive in Hong Kong dollars instead of ECNY. So that will mitigate or minimize the financial risks, such as currency substitution, and avoid any interruption to the jurisdiction's economic concern.
Great, wonderful. Thank you for this very thorough answer. I think our time is up. Thank you again, Director General Mu, for your excellent talk on ECNY. I know you've given a number of these, but as I said already, I learn something new every time you come to us in the United States and other places outside of China to give an introduction to ECNY. As I said, I'm very eager to use it next time I go to China. Hopefully I'll get a chance to go to China. I will hand things off to Josh here to continue with the proceedings.
Victor, thank you, and Director General Mu, thank you. This is the second time in less than a week we've had the pleasure of hearing from you, and you've answered an array of questions on a range of issues. And as you can see in the chat, there are many more. So my hope and my request is, as things develop on the ECNY, we can invite you back to the Atlantic Council. Thank you for joining us this evening in the US and this morning in China. So it is my pleasure now, as we move forward with the launch of the conference, to transition to the second part of our keynote event, a conversation on markets, entrepreneurship, public-private sector collaboration and innovation. To take us through that conversation, I'm very pleased to welcome Olga Karif, crypto reporter for Bloomberg. Olga, thank you for being with us this evening on Valentine's Day, and I'll turn it to you to introduce our fantastic panel.
Thank you, Josh. And I'm so pleased to be part of this Atlantic Council event, and so honored to introduce to you our distinguished panel. With us is Siddharth Tiwari. He is Chief Representative of the Bank for International Settlement Office for Asia and the Pacific. Before joining the BIS, Mr. Tiwari served as Executive Secretary to the G20 Eminent Persons Group from 2017 to 2018 and occupied top-level positions at the IMF from 1985 to 2017. Our other distinguished panelist is Jeremy Allaire. He is co-founder, chairman, and CEO of Circle, a consumer finance company that aims to harness the power of stablecoins for payments and commerce. And Mr. Allaire is an internet entrepreneur who previously co-founded and led multiple internet technology companies and several successful public offerings on the NASDAQ. And our third panelist is Mr. Yifan, and he is founder and CEO of Red Date Technology, the architect of the blockchain-based service network, BSN. He is an entrepreneur and investor who founded his first company when he was still in college, and he spent more than 10 years in China working on private equity and finance. And we'll start off by talking about some of the common threads in digital currencies in the region. And Siddharth, I was hoping we could start with you. And so everyone is looking at CBDCs and is following your work there. And I was wondering if you could possibly bring us up to date on some of the lessons in terms of benefits as well as challenges that you've come across in your CBDC work so far.
Thank you so much. And I'd like to thank the organizers, Atlantic Council and UC San Diego 21 CCC for this invitation. I'll be brief. I'll sort of touch on 4 issues in the big picture, design, what's going on in Asia, a little bit what we are doing ourselves. But before I start, I think the story of CBDC or the story of finance and technology, it's something that Napoleon reminded us of. He said, I'm in a hurry, so please go slow. And then he went on to say that getting it right is more important than getting it fast. And you heard this morning that Pblc has been looking at CBDC since 2014, so it's about 8.5 years now. Many countries have started recently. And so what is the big picture challenge in all of this? The first fact is the cash to GDP ratio, which is a proxy for cash and payments, is declining through a whole lot of countries. And as big tech and fintech firms move into this space, they are challenging the payment system. And in many emerging markets in Asia and India, digital payments via mobile phone have gained ground. And you saw in Changchun's description this morning a similar description on what's going on in China. And I think it's fair to say that Facebook's Libra was a wake-up moment for the international community. So why CBDC? Today globally, we have 50, 60 countries with fast payment system that offer payments 24/7, 365, instant, costless, settling immediately in central bank money with push or pull options that we saw in the video this morning, and with the offline transactions that we saw. So why CBDC? Even countries, I would say like India, that has over 4.5, 5 billion transactions a month in their fast payment system, there's a desire to pursue CBDC. And I think here the starting point is that for 400 years, central banks have provided this service, and technology will not and should not change that. So the motivation, and we've gone through our membership in Asia, the motivation is to provide cash in a digital form in light of the reduced usage that I had mentioned. But it's also to prepare for future innovations that are unanticipated now. If you look at demography, the younger population is mostly digital. Another motive is financial inclusion. Remittances across countries are charging 6 to 7%, which is extremely high. And also there are hurdles in inclusion in many countries in Latin America, especially there's unwillingness of the private sector to serve remote locations. So everything in inclusion is not going to be solved by CBDC, things like digital literacy and rest, but some of it could. CBDC could help with fiscal policy. We see it in many countries like India, Indonesia. Importantly, it's programmable money. It can be tied with smart contracts. And finally, it was mentioned this morning a little bit that it provides competition or keeps in check the competition with payment service providers. There are some challenges, as we heard. its impact on cash demand, whether it disintermediates commercial banks, impact on monetary policy, financial stability, digital divide, privacy, and lastly, cyber risk. On the design elements, I think there are two major design elements. That there's a worry in Asia that the path that the large economies take will have significant impact on the availability of choices for smaller countries. And the second is whether there is CBDC cross-border, will it lead to digital dollarization or digital another currency, exchange rate volatility, tax avoidance, and the rest. On the choices itself, there are two types of CBDCs. One is retail, general purpose, we heard this morning. Second is wholesale. Wholesale CBDC we've had for a long time, which is reserves that move in a digital format in the system. What wholesale CBDC differs is that it can have a wider set of counterparties than reserves, be interoperable with foreign systems, and of course, what I mentioned features smart contracts. So importantly, and I'll stop in a minute, the important aspects are degree of interoperability with the domestic payment system, the degree of central bank involvement in the system, whether CBDC plays interest because there is no interest on cash, whether there's a constraint on transactions amount. We had heard 4 levels this morning, but should there be a constraint? Should there be a constraint on outstanding balances, on foreign users, and the use abroad by domestic users? Of course, there are data governance under this, and the underlying technology, whether it's uses DLT or a central ledger technology. Maybe I stop here a little bit because I've gone over my initial time, and then I can come back in a more granular way to what is happening in Asia in different countries.
Thank you, Siddharth. And I love the Napoleon reference. It's really interesting what you said about how CBDCs perhaps can solve some of the issues that have been so hard to solve, with traditional finance. I will now ask Jeremy Allaire. Jeremy, so, you see digital coin development in the region through a different lens, that of a private stablecoin provider. And I was wondering, what has it been like for you to work in this region? How has it been different for you from working in the US, for example? And, what has your footprint in Asia Pacific been, and what are your plans for the region? Is Jeremy on? Or should I go perhaps?
This is Jackson, the AV manager. Mr. Allaire, we cannot hear you. I'm sorry, we cannot hear you, sir. Perhaps we can move on to another panelist and come back to Mr. Allaire.
Great. Yifan, if I may go to you next, please. So I know a lot of work in the region for you focuses on the underlying infrastructure. Could you talk a little bit about what has been like for you, to watch this debate about, CBDC, stablecoin versus cryptocurrencies? What have you been focused on in the region, and where do you see opportunities today?
Yeah. First, one question people ask me a lot is why China, basically is the #1 country pushing the central bank digital currency, but at the same time banned cryptocurrency entirely. So this is actually something. It's in China we actually divide the digital currency into two different categories. The one we call is a payment-related digital currency, like central bank digital currency, stablecoin, etc. Another category is actually the investment-related digital currency or security. We consider them security. So cryptocurrency in China consider a security. So and in all the countries, security is always heavily regulated in any country. So the reason is because as long as it's an investment, it's a security, it need to be able to trade fairly. So that's why there's always heavily regulated. But for cryptocurrencies, they're technically impossible to regulate that. So that's why and also another reason is in China, most investors are individuals. Okay, so individual investors need to be protected mostly. So that's why the entire cryptocurrency, as a security, is basically banned in China. From mining to trading, to exchange, everything is banned. But for the payment-related digital currency, actually is as we all say, it's actually very advanced in China. So this is actually the reality in China. And also in China, by law, only the RMB is a legal tender. Actually, by current law, stablecoin is not allowed in China too. So that's basically the landscape in China. So personally, I'm actually very interested in the payment-related digital currency. Actually, not only is the digital yuan, the ECNY, it's also stablecoin. Is we consider it's also a payment-related digital currency. So, but right now, actually, if you see those two technologies, stablecoin and Chinese digital yuan, right? We actually see that as the two extremes. The Chinese digital yuan is centralized, KYC based, two-tier system. You need to go through a commercial bank in order to use it. But the stablecoin like USDC and USDT is totally on public chain. No KYC. Can be traded. Basically transfer money anonymously. So it's two extremes. And personally, I believe all the payment-related digital currency will fall in between those two. Okay, but for the Chinese one, we saw the presentation by Ms. Mu. It's actually, as a central bank digital currency, I think in the future most countries can learn from China because, for example, the two-tier system. Why there's a two-tier system? When you use digital currency, you need to go through a commercial bank, because if the central bank digital currency doesn't go through commercial bank, which means the central bank is in direct competition with the commercial bank. You are a regulator and you are basically competing with commercial bank. It's a mess. How to handle that, nobody knows. So that's why, personally, I believe in the future, most central bank digital currency, KYC-based central bank digital currency will go through a similar structure. So that's why it's, stablecoins and central bank digital currency. Personally, I think the digital currency eventually will change the entire financial infrastructure and the financial sector. So right now in China, because in China right now only central bank digital currency is allowed. So there's pretty limited, place for private sector to get involved. So, but I think the digital yuan will slowly to expand their ecosystem, and there will be more openness and more IT system besides commercial bank can access to the central bank digital currency system in the future. So there will be a lot of opportunity there in the future. So, okay.
Thank you. And I'm not sure. Is Jeremy on?
Can you hear me?
Oh, hello.
Hi. Sorry.
Hi. So Jeremy, good to see you. And was wondering, so Yifan just talked about, there may be a middle ground between sort of Cbdc's vision and the sort of private stablecoins vision that we've seen. And I was wondering sort of how, obviously you are on the stablecoin end of it, and I was wondering sort of what has it been like for you in Asia Pacific so far? Sort of how much of a footprint were you able to get there? How much of an opportunity do you see there? And you know, just how different has it been working for you in this region versus, say, in the U.S.?
Yeah, thanks, Olga, and sorry about the mishap there before. Well, I'd start by making a couple of comments. I think the first is just to understand, you know, with USDC, you know, which is, you know, grown very, very fast as a dollar digital currency on the public internet. You know, USDC is, you know, offered on public blockchains as, in a sense, as an open technology protocol, meaning wallet developers, exchange developers, custodial service providers, protocol developers, all the kinds of participants in this new digital financial ecosystem can connect to and support USDC as a technology, and then have a reliable, trustworthy, transparent, regulated dollar digital currency that they can use. That kind of openness, you know, which we've offered, has really led to adoption in Asia very broadly. So, you know, many digital wallets, exchanges, decentralized finance protocols throughout Asia support USDC as a way to transfer and settle dollars. Now, Circle itself, in terms of us directly offering financial services products, directly offering accounts in the region, we haven't yet launched our full Asia operations. So we have publicly, you know, shared that we're in the process of becoming a licensed institution through Singapore and building out a presence there. And once we're launched in Singapore, then we'll be able to service businesses and clients much more directly. But today, you know, USDC as a sort of technology, a protocol, and a standard has a great deal of adoption already in Asia, because I think in these digital asset markets, you know, they continue to be predominantly denominated in dollars. Payments and settlements on the internet are predominantly denominated in dollars. And I think that's one of the key points that I would make is, you know, the advent of digital currency on the internet, you know, creates an opportunity for major fiat currencies to be used, you know, more broadly and in more efficient ways in markets. And so, while we certainly have seen a lot of activity and demand for USDC in Asia, we've similarly seen it in Latin America, in Africa, and certainly, you know, in other parts of the world, similar to the general disposition towards transactions in dollars around the world already today.
Thank you. And Jeremy, in terms of, you know, some people see a clash potentially between CBDC and stablecoins. And in fact, the recent IMF paper said that CBDCs can be more efficient, less costly, less risky than private stablecoins. And I was wondering, do you buy this argument? Why or why not? And sort of, do private stablecoins and cryptocurrencies in general have something that CBDC does not have or offer in terms of privacy and other characteristics?
Yeah, so I can speak specifically around USDC and how we look at that. I mean, our view is that is a few things. I think the first is open internet infrastructure, kind of public internet infrastructure, and the sort of standards that get built up on public internet infrastructure, even though those technologies are decentralized and accessible to all around the world, have been really, really powerful in making our systems of information exchange radically more efficient and available, our systems of communications radically more efficient and available, touching billions of people and scaling to support that kind of activity. I think our view is that these new standards and protocols for money on the internet, representations of fiat, protocols for settling transactions, systems for automating, you know, money on the internet through smart contracts, doing that on public internet infrastructure, on these public networks, is a huge mega trend and is accelerating. And the amount of private activity, the tens of thousands of companies now around the world in every country that are building on that public infrastructure is adding to the growth in that. So there's a whole vector, there's a whole growth in the public blockchain ecosystem, the developers and the companies connecting to it. And that's really happening independently of what governments might try to do with their own research and development. And so my own view is that private sector innovation and the kind of public goods and public commons of this blockchain technology will achieve internet scale. And it will do that over the next couple of years. And that will have to be regulated. That activity around stablecoins is absolutely already regulated in the United States. It's regulated under the same kind of regulations that payment companies like PayPal, Square, Stripe, Apple Pay have been regulated under. That's how Circle's regulated today. It's going to become a national priority to establish national regulations around this, which is exactly what's being discussed in Congress, in the White House, the Treasury Department, the Fed, who now acknowledge stablecoins are here to stay. They're going to be a very important part of the national and international financial infrastructure, and we need to make sure we have sound regulation around them to allow that to grow. So that's a whole path that's happening, and it's happening at a rapid pace. There may be a separate path where governments do research and development into operating their own centrally administered technologies, but I think there's going to also continue to be a very, very robust private sector path, which is growing very rapidly. And governments are going to need to make sure that they have good policy around that as well.
Thank you. And I'd love to get Siddharth's take on all of this. Like Jeremy said, he sees a lot of, big future for private stablecoins. Sort of how do you see things developing in terms of CBDCs versus private stablecoins? And also, how do you look at potentially sort of interconnecting the world with CBDCs? Sort of how, I know you've been doing some cross-border testing, how is that going? What do BIS's partnerships look like in the region? If you could possibly talk a little bit about that.
Sure. So look, just pulling back a little bit, there are two facts here. One, cash is only 10% of money supply. So we need to put it in perspective. It's not 20, 30, 50. It's on average, it's 10% of money supply. And so we are talking about whether we are looking at that portion. And we had talked earlier that on the retail front, there are going to be gains because there's going to be, the public is going to be using it. But the major gain is going to be on wholesale CBDC outside reserves with smart contracts. I think our view has always been that public-private partnerships are the way to go. But for money, the issuance, the central bank plays a critical role in ensuring the finality of payments. This is one area where there is no recall option that is available in other areas. If there's a mistake, the cost of the mistake will be high. On the digital currency, and Jeremy mentioned a little bit on whether it'll lead to slightly more internationalization of local currencies or not. I've worked quite a bit on internationalization of the RMB and other issues. I think what is clear is that digitalization per se does not help with the internationalization of currency. It's the rule of law, it is an open capital account, it is the independence of the central bank. I mean, these are major issues. And over decades and decades, US dollar has occupied a central position, 60% of global reserves, 80% of the counterparty on Forex transactions. And Jeremy mentioned some of that too. So it's going to take a long while getting there. On the cross-border payments, which is an exciting part, also because on transactions, the cost is extremely high, 6 to 7%, and it hasn't come down. I think here we have a bunch of projects going in the Innovation Hub centers in Singapore. They're looking at exploring the advantages and disadvantages of different DLT prototypes and validating mechanisms to support a common Cbdc or multiple Cbdc. They're also looking at creating cross-border payment bridges that connect multiple fast payment systems. So, for example, they're looking at, or Singapore's looking at connecting the Indian fast payment system with the Singapore fast payment system. And, you know, I'm not a proponent of bilateral connections because in the end it has to be multilateral. But it is, if fast payment systems can be connected, it offers one more layer. In Hong Kong, we're looking at the benefits, challenges presented by the tiered architecture for distributing retail CBDC through commercial banks. And Changchun had talked about the M-Bridge project right in his presentation in the beginning. I think the aim ultimately would be that can we build a common multi-CBDC platform that will enable faster, cheaper, safer cross-border payment settlements. So this is some of the work that is going on in Asia, but the reality in Asia is that there is huge diversity, that everyone is not going in the same direction. China and Vietnam are on retail CBDC. Malaysia is looking at wholesale CBDC. Some are in a purely exploratory stage. They don't see the urgency to be around the corner. And these are fairly advanced economies like Korea and Singapore. On the other hand, several have progressed to the pilot proof of concept stage, Hong Kong and Thailand being there. And of course, China is close to launching it. So there's a variety of experiments. And I think from our side, this is precisely the way we should move forward. We should look at various alternatives. We are in no hurry to get to an end. We need to get it right.
Yifan, just to follow up on what Siddharth just said, you know, it seems like some of it is, an issue of policy, sort of different countries' policies and goals aligning, and a lot of it is also a huge technological challenge. Sort of, could you maybe talk a little bit about, how do you see this problem being solved? Like, how can CBDCs be interoperable, and how do you link them together? What are the difficulties here from the technology standpoint, and to what degree are the problems technology related? To what degree are they policy related?
First, I still want to emphasize the importance of the stablecoin and the central bank digital currency will coexist. Okay, and they will work for different business scenarios, user cases. If you need a more transparent, more efficient, and the easy access, you probably go to the stablecoin. But if you, where large amount of money between businesses, between the financial institutions, you probably use central bank digital currency. So those two will coexist. Okay, it's not like which one is much better than the other one. They just work in different scenarios and use cases. So, but it's I think for all the digital currency, the policy is always number one. Okay, so it's no matter. I mean, the technology is always easy as long as you invest money. You know, it's always can be done. But the policy always comes first. You know, so for all the country, I think the first thing to do is they need to make decision to build a central bank digital currency. You know, some country probably even won't, like the United States, probably, you know, the way they go, it's probably just authorize the private sector to issue stablecoins, under very strict regulation. So most country will make decision to go central bank digital currency. But when the policy is there, the technology is, personally, I think is easier. Okay, but like I said, what will become more important in regards of technology is when every country building their own central bank digital currency, and there will be probably hundreds of stablecoins, regulated stablecoins out there in the world. And then next question is how you link them together and how to handle the foreign exchange, because the whole thing is become totally different. So then there will be infrastructure built. For example, why we need a SWIFT? Because each commercial bank has different account system. In order for different account system to talk to each other, then you need something like a SWIFT, a messaging network. Then there will be the similar things in the world for digital currency. You know, even to link, stable coins and different central bank digital currency from different countries. I mean, that infrastructure, just imagine, it's probably more complicated than SWIFT because, stablecoin is anonymous, how you handle the KYC and let them to legally talk to different countries' central bank digital currency system. So it's very, very complex. And how to handle foreign exchange, how to handle settlement in different central bank digital currency and stablecoins. So, I mean, and also the infrastructure for all the financial institutions to use those digital currency. For example, stock exchanges, how they, to settle in different currency, in a much, much more efficient way. So there will be so many infrastructure needed to support this kind of digital currency economies. So I think there's a huge opportunity. We are also involved in some initiatives, to explore this kind of, infrastructure. I personally talked to David Post a couple of times regarding this kind of, infrastructure, how to support stablecoins. And also I also working with BIS, Hong Kong Innovation Lab, how to link different central bank digital currency with one infrastructure. So that's actually a huge opportunity there in the future for all the financial institutions, technology companies. I mean, it will change everything probably in 10 years.
So it's really interesting what you said about how basically all of the, SWIFT, all of the banking infrastructure used today essentially would have to be changed. And I actually have a question for Jeremy on this. So, how do you think, private companies in crypto may need to change to sort of to fit in with the regulations and, the way CBDCs are being developed? Sort of, is there a lot of change kind of to be expected here?
Well, I think if you look at the developments out of the United States, this has been a regulated industry for over 8 years. The U.S. Treasury Department put forward regulations around firms that were involved in exchange, in interacting with blockchains as a payment system, and that led to many firms being regulated at the state level through state banking supervisors, through trust charters, money transmission laws, and you've seen that grow. So many firms like Circle and Coinbase and Gemini and others have long been regulated, and so that's not a new thing. I think as the technology has advanced and the use cases have grown and the impact of this on different parts of markets, trading markets, commodities markets, as a payment system, the amount of kind of policy and regulation is increasing. And I think that's increasing corresponding to the increasing role that this technology is playing in the world. I think as an example, USDC, grew 10,000% over 2 years. It grew incredibly fast. Last year in 2021, we saw over $2.4 trillion in blockchain transactions using USDC. And so as these things grow, I think what a lot of policymakers are seeing is there are many things about these technologies that are new and different than the existing or the traditional financial system, as some people would refer to it. And there are different risks. There are new risks, and there are traditional risks that are just have to be handled differently in these platforms. And so, I think if you're trying to build a financial platform company or a financial services company on digital assets and blockchains, you have to assume that you're going to be operating in a highly regulated environment. And that's not just in the United States. You're seeing that in Singapore, in Hong Kong, in London, out of the EU and other markets. It's just increasingly the case. But I think that's just indicative of how important all of this is becoming in the mainstream economy.
Thank you. So I'm thinking maybe we do one more question and then move on to audience questions. We are getting a lot of them. Siddharth, if I may ask you, so when you sort of, there are so many things to think about with implementing CBDCs, and so at this point, do you feel like current CBDC plans are factoring financial inclusion enough? To what extent do you think privacy concerns are being an issue, and in which countries that are implementing CBDCs? Would love to hear your thoughts on that.
Okay, so just quickly, I think there are like 5 main operational issues. One that we talked about before was whether they will lead to financial disintermediation or not. And so here there are 2 issues. One, if there's interest on currencies, currently there's no interest on cash. Will it pull money out? Safety, balances above the deposit insurance and commercial banks, whether they're likely to move. This morning we heard about putting caps on it. And here's a policy trade-off that constraining the convertibility to control volatility is on one hand versus providing a safe means exactly at the time when it is needed. And that's a policy challenge that we deal with all the time. Second, monetary policy, that it will expand the central bank's balance sheet, and that needs to be dealt with. Third, we talked about quite a bit operational. The system needs to be robust, stable, able to recover credit, liquidity risk. Cyber risk is a major issue. Just think about it. Hacks into your credit card database itself offers a minute glimpse of what the problem is. In case of CBDC, it's the multiplicity of linkages that would be involved. The operational burden, this morning when we looked at what China is doing, it's very clear. It is an operational burden on the central bank, network resilience, safety, cost of maintaining technology. And then finally, if there is a fast payment system that is operable in countries, whether ultimately CBDC will lead to lower adoption. And one needs to be open to that it is not clear that it is going in one direction. So these are the challenges that need to be dealt with. I agree with Jeremy completely that we hopefully we are moving to a system where regulation and innovation can move hand in hand. That the public authorities define the regulatory framework and the infrastructure or the regulatory rails, and the private sector, which has the consumer interface, is able to innovate. Because that's not the strength of the public sector. And we are beginning to see a version of that. I go back to the fast payment system in India, which is has all the characteristics that you would expect. It is WhatsApp and Google Pay friendly. So 300-400 million accounts in WhatsApp, Google Pay are on the public rail, but it is settling in fiat money inside the central bank. And from our perspective, that is perhaps the best definition of public-private partnership, where innovation lies with the private sector, but certainty and regulation lies with the public sector.
That was such an insightful answer, I think, and it's kind of talks to there's a place for both of these sectors, and I guess we'll see how it all evolves. Like you said, we'll have to see what happens with Cbdc's and their uptake. I'm thinking now we move to audience questions. Yifan, you have the first question. An audience member wants to know, what do you see as the most promising commercial segment in the ECNY ecosystem, both today and say 5 years from now?
Right now, actually, because it's still in trial right now, so it's when you access the digital RMB, you still need to go through a commercial bank. So right now, actually, for the end user, when we use the digital RMB, it's no different than using a regular commercial bank account. So it's actually no difference. So, but I think, at this current stage, it's actually the right thing to do, like the consumer, even commercial bank, to get used to this kind of, new form of money, then let them to, build, this eventually will change the service model of the central bank, of the commercial bank. So right now it's no difference. So, which means, personally, I think there won't be huge usage right now, because for end users, they just use Alipay or Tenpay. They don't even need to use digital currency. But I think now what's important is to test the market, understand all the risks, build a better infrastructure for the future. Personally, I think right now it's very safe. It's no difference in the commercial bank account. But the problem is it doesn't have the full potential of digital currency. So in the future, I think the central bank digital currency system will open to more IT systems access, not only commercial bank, probably the third-party payment company, even some large company to directly access the digital currency system. Then this will have the digital currency, the Chinese digital yuan will become much, much more powerful, which means you can do a lot of transfer money services without go through the commercial banks. The settlement will be much faster. There's huge potential there. For example, some large company like China Mobile, they can directly access to the central bank digital currency system, and basically they can become a bank. They can give loan to their customers. They can give credit to their supplier. Give loan to their customers. They can do a lot, since they can even perform as a limited bank. So that's why I say. But I think the step right now is very steady and in the right way. You cannot just open up and destroy all the commercial bank's business model. So I think right now it's the right way to go. But slowly they will enlarge the ecosystem and also open access to the more IT system for them to utilize digital currencies.
Thank you, and I think this is like the perfect transition for the next question to Jeremy. Jeremy, do you see stablecoins pegged to other national currencies gaining traction, and would Circle explore issuing such stablecoins?
Yeah, we absolutely see that. There are already many emerging projects, and I think you're going to see this year in particular significant growth in other fiat digital currencies that are operating on blockchains. I think you'll see that out of the European market. You'll see that out of Latin American markets and Asian markets. You're already seeing stable coins that are swappable on blockchains, providing on blockchain FX. And so we certainly see that. And I think the regulatory clarity that you're starting to see and the well-established practices for how to operate these safely is leading to more of that. And Circle itself, we absolutely do intend to issue other fiat stablecoins, and we hope to be able to do that this year.
Thank you. It's been such a fascinating discussion. Today, we heard about many of the emerging issues in digital currency development in the region. You heard the panelists speak about regulation, kind of this dance between technology and policy, financial inclusion, privacy. Thank you so much to our panelists for being here today, and it's been such an amazing, insightful discussion. And I'll pass now the baton back to Josh.
Olga, thank you, and thanks to all of our panelists for that conversation. That was fascinating, and even at the end, Jeremy, I learned from you about Circle's plans in the year ahead and other fiat-backed stablecoins, which is fascinating. Jeremy, Yifan, Siddharth, our appreciation for being here and sharing your insights with all of us this evening or this morning. Before we close, a few thank yous. Many people worked for months to get this conference off the ground, and then they committed their Valentine's Day evenings to helping make tonight possible. It is true, as the Beatles sang, that money can't buy love. But at least for tonight, we hope it was a decent substitute. Thank you for joining us. And thank you to Professor Victor Shi, my co-organizer of this conference, Dr. Lei Guang, the Executive Director of the 21st Century China Center, Dr. Harry Daucher, Assistant Director of the Center. I want to thank Dean Freund, Professor Shirk for their support on this conference, and thanks as well to Sherry Hu from the 21st Century China Center. On the Atlantic Council side, let me thank Ananya Kumar and Niels Graham, our assistant directors at the Geoeconomic Center, who worked tirelessly on this event, and in fact, are still working at this moment. And to our amazing events team, Jackson Styron, Doshelle Hamilton, Jasper Gilardi, and Eamon Coughlin. Thank you all for being with us this evening. We wish you a good rest of the week.